We have a critical Tesla stock update as well as an update on the broader markets. The selling has hit a new extreme. This is starting to look like the same exact chart that you've seen before Black Monday in 1987 when stocks fell 20%. History does not always repeat itself, but it usually rhymes, and this time the rhyme is starting to rhyme. On top of that, we are going to get into all of the Tesla stock news you need to know, including weekly vehicle registration numbers out of China, and Tesla is now raising prices on charging for Canadians by about 25%. All of that and much more here in today's episode. This is a video you cannot afford to miss, as the Nasdaq and the S&P 500 down about 1.5% today. For the week of September 18th through the 24th, China reported 13.5 thousand Tesla insurance registrations. This number is better than what it could have been. Now, it's a lot lower than what we seen this same week last year, but it could have been worse. A matter of fact, this number could be the reason why Tesla's stock was actually in the green earlier today when the S&P and the Nasdaq were both respectively down about 1%. So the markets looked at this as positive news today. We are also well above the same point that we were at last year. Last year, around this time, in total, you had seen about 320,000 China insurance registrations at this point, and today you're about 100,000 higher than that. So that is some impressive year-on-year growth. Tesla increases supercharger prices in Canada by as much as 25%. Stations in British Columbia have seen prices go down, while all other provinces have seen prices go up, in some cases substantially. British Columbia had the lowest supercharger rates in Canada, and after this latest round of price adjustments, the price gap between the West Coast and the rest of the country has increased even further. Drive Tesla reviewed several stations in BC that went down in price from 47 cents per kilowatt hour to 35 cents per kilowatt hour. The Victoria supercharger, also on Vancouver Island, dropped from 29 cents a kilowatt hour to 22 cents. On the mainland, the cheapest supercharger in the country in Delta has stayed the same at just 10 cents per kilowatt hour, even cheaper than plugging in at home. So pound for pound, compared to ICE vehicles, charging is still very cheap, and this is only going to be a positive thing for Tesla's earnings. Huawei says upcoming Lexeed S7 EV is superior to Tesla's Model S. This car will officially make a debut in November, and quote, it will be superior to Tesla's Model S in various aspects. This car is going to debut from the Shanghai region as well, so a direct quote unquote competitor to Tesla. While the company didn't disclose specific features, common functions unique to EVs often include semi-autonomous driving, self-parking, voice controls, and more. Huawei is the same company that was outright banned in the US. It's a smartphone maker, and recently just seen even more sanctions. Now, what's interesting here, take a look at this. In 2021, one Huawei executive was fired after calling Tesla's vehicles, quote, killing machines, resulting in the company receiving complaints from the US automaker's legal team. We do have some finished images from the entrance of Giga Texas. And look at that. That is quite futuristic, quite the sight if I were to say so myself. Inside the building, the front desk is, I would say, even more impressive. Look at that. Sawyer Merritt is reporting that every Tesla affiliate page now has posted jobs on their X profiles. So Tesla is looking to recruit everywhere. This is a great sign heading into 2024 for all Tesla stock investors. The last thing a company would do if they expected to see bad growth, or slowing profits would be hiring in every department, essentially, of their business. Denmark now has more than 50,000 Teslas on their road. Back in 2018, there was only 4,000 Teslas. In 2020, 12,000. And today, 50,000. This is hundreds of percents in yearly growth. Tesla has filed to build a $10 million cyber cafeteria at Giga Texas. Construction is expected to be completed by April of 2024. It'll be 22,000 square feet. But after all, if you're looking to hire up to 60,000 employees at this factory over the next coming years, you need to have some form of cafeteria. That's a lot of people. Tesla has now lowered the price of the Powerwall 2 in the US by $300 down to $8,400. This includes the $500 rebate for the Who install by October 31st, 2023. Magic Docks in Utah, Michigan, and Washington State are being added by Tesla. This is allowing more non-Tesla EVs to use the supercharger network. That is all as far as your important Tesla stock news today. Let's get into what in the world is happening to our markets. Take a look at this chart. This chart was posted on Saturday to X. On the left side is 1987. And Black Monday was this candle right here. But before then, the 3 days before that were quite red as well. And this is a chart of our markets today. Almost identical. Now, times are different, obviously. In 1987, market makers did not want to buy stocks. That's not the case today. The market makers, that is their fiscal responsibility to buy stocks. So a 20% drop, it's not like that is going to happen. During the Rona crash, when nobody knew what the outcome was going to be for that, the most you dropped in a single day was like 12%, and then you ended up down only like 9% or so. So you're not going to get another 20% drop. But it's starting to rhyme here. If you take a look at the individual candles as well, this chart has not been updated, so we obviously have now traded Monday and Tuesday. What you seen yesterday was a bounce, which is exactly what you seen in 1987. And then this latest candle right here where my cursor is would be today, and you're falling under the previous bounce level, in which is what happened in the week of Black Monday. So the next couple of days could also be quite red if history does continue to rhyme. We are going to get a lot of very important data coming out throughout the rest of this week, and that's really what is going to drive this market higher or lower. The main problem now is a recession. That's what the markets care about. The Fed made it very clear. No matter what happens, no matter if inflation goes down to 2%, if we are seeing strong economic growth and activity, they're not going to cut rates, and they're not going to pause their interest rate increases. They need to see the economy not doing well to really crush inflation. If they don't, they could have another 1970s moment and see inflation resurge. 1970s, 80s, in that period. That's not what the Fed wants to see happen. So the markets are very clear. We are heading into a recession one way or another. The problem is, since May, the markets have not priced in a recession. You have priced out a recession in our markets. And now we're forced to reprice a recession back in. You're obviously not going to price in 100% of the recession until you're going into or just enter the recession, but to price in 50% of it, 30% of it, sounds reasonable to me. Even if you price in 30% of a potential recession, given where stocks are today, you still have more room that you need to fall. Pre-Rona, the S&P was around 321. Today, you're still at 426. So where do you need to go to 30% price in a recession, or the presumable pain that companies would see during a recession? Let me know down below in the comment section where you think markets need to go to actively price in a portion of this upcoming recession. Jamie Dimon warns that the Fed could still raise interest rates sharply from here. If you guys don't know who Jamie Dimon is, he is the longtime CEO of JP Morgan Chase, and he is warning that interest rates could go up quite a bit further as policymakers face the prospects of elevated inflation and slow growth. Quote, "I am not sure if the world is prepared for 7%, he told the Times of India in an interview. The comments come less than a week after Fed officials indicated that they could approve another quarter-point increase before beginning to cut a few times in 2024. But let me tell you right now, the economic data is so important because if we start to go through a downturn and the Fed starts to see this economic weakness, interest rates at 5.5% make no sense. Now, on a political front, the Fed is separate from the government, so they should not be influenced by what the president were to say, what the Treasury were to say. But they are. Let's be honest. They are. And the data behind a incompetent president winning a re-election during a recession is not good. Since 1900, only one president won a re-election within 2 years of a recession before that re-election. So basically, if we go into a recession right now, there is an 80% chance the current president will not get re-elected based on historical numbers from 1900. People don't vote on policies. People don't vote on what they think is better or not. People vote on their pocketbooks, their jobs, and the economy. So that, I think, can set you up for an emergency rate cut kind of situation if we do see the economic data take a turn for the worst, and that's possible this upcoming week with the data we are going to give. The 10-year and 2-year yield curve inversion is inverted by 0.54%. At the lowest point, you were inverted by 1.08%. So you are halfway uninverted. Typically, when you actually uninvert is when you are within months away from a recession. And this is a foolproof indicator. If this indicator is wrong this time, it will be the first time it has ever been wrong. During the inversion is not where you need to be a little bit fearful or conservative in your spending activities in the economy. Right before a recession, you tend to see the yield curve uninvert. And you're starting to see that right now. But let me tell you, when you start to see the uninversion, it can go very quickly when you do go into that recession. My personal favorite yield curve inversion, which is the 10-year and the 3-month inversion, you can see we are by far the most inverted we have ever been. You hit a low, meaning you were inverted, 1.88%. Now you're only inverted 1.03%. And you're rapidly steepening. Over the past couple of days, you have steepened huge, massive. I mean, this is a sign you're heading into recession. Obviously, the Fed is not paying attention to that. Most individuals are not paying attention to that. That's why this information could help you make so much money. Great things, unfortunately, are probably not coming at least until 2024. I would argue the second half of 2024. You're going into a recession. You need to be careful here. If you guys would like to come hedge out your portfolios with us, come get access to every time I make trades in real time every single day, link down below in the description of this video. The point of that is you can not sit on your hands. You can be active in the markets. You can put on some trades, put on some hedges, make money if you do see downside in the markets, take those profits, invest back into your favorite stocks, which is most likely Tesla if you're watching this video, at much lower levels potentially. Linked down below in the description of this video if you would like to be a part of it or just help support the channel. WTI crude futures are up over 1% today. As you can see, you've rallied from about $70 a barrel or $67 a barrel back here in June to over $90 a barrel here today. This is a spike of over 35%, and from 1945 until now, every recession we have went into, you have seen a spike in oil right before the recession. So this could be the spike in oil before the recession. Although markets are deep in the red today, Tesla's option activity is quite bullish, 62% bullish. A matter of fact, you have seen 697 orders totaling $237.29 million, and it does not look like there is a lot of fear in Tesla's option activity. This is a great sign specifically for Tesla. If we also look at Tesla's option activity that expires this Friday and blow this up on a bubble chart, you can see the calls as far as total amount of contracts being held. Well, there's no puts. It's all calls. So if you're looking at the most actively traded options on Tesla, well, that would be the 255 call with almost 50,000 for volume today. The 257.50 call with 16,000 for volume today. But the puts also seeing a lot of activity. The 240 put, 74,000 contracts trading hands today. The 245 put, about 60,000 contracts trading hands today. The 235 put, about 37,000 contracts trading hands. Another 22,000 contracts at the 230 put. But we'll see what happens coming tomorrow if the volume turns into open interest or if the volume is just reflecting traders. It looks like more people are buying and holding calls, whereas the put traders, they're day trading Tesla, really, to say it lightly. There's a lot of volume, but the open interest stays pretty dang low. So they're just getting in and they're getting out. Not really a longer term hedging idea here in Tesla stock. The dollar amount sold short in Tesla as of today sits at $20.22 billion. This is double the dollar amount that is sold short in an Apple, Microsoft, Nvidia, Google, Amazon, Meta. You get the idea. There's a lot of shorting activity in Tesla stock. There's a lot of, if you will, legacy shorts that are in Tesla. So that's why the beta is so high. That's why the volatility will be so high. If the markets do crash and burn throughout this week, as this chart in which we previously looked at is kind of suggesting will happen. Again, this is the chart from 1987 and the chart of today, almost identical. Well, Tesla stock could take a beating throughout the rest of this week. But if you do see a reversal to this downtrend based on some of the economic data coming out this week, you could get quite the rally. On Wednesday, we are going to get durable goods orders at 8:30 in the morning. So that is tomorrow. We're going to be talking about that specifically during the video that comes out at 9 p.m. tonight. So you really need to watch that one. But let me tell you right now, I'm not that bullish for tomorrow. Now on Thursday, you're going to get the GDP final numbers, initial jobless claims, as well as Fed Goolsbee. But most importantly on Thursday, Fed Jerome Powell that speaks at 4 p.m. And then on Friday, you're going to get the biggest data of this week, which is personal spending month over month, personal income month over month, core PCE, and headline PCE. So there is a chance this week, towards the end of the week, tomorrow, Thursday, and Friday, could be exceptionally volatile, and you could see some very big moves in our markets. And unfortunately, it's one of those times where it's kind of a lose-lose proposition. On one hand, the Fed has made it clear we need to see a weakening economy to get the Fed to stop raising rates, number one, but to also start cutting rates. So that you would think would be good. Hey, if the economy starts to do bad, well, isn't that good? No more rate hikes, some rate cuts? Well, no, because markets are ultimately more fearful of a recession than they are the Fed raising rates. So there's no win here. And I think that's ultimately why the markets have been selling off so hard over the past couple of days. There is no win. Tesla's stock on the charts looks very encouraging. This 100-day moving average is a major level of support. As you can see, yesterday you bounced right at this 100-day moving average, retraced all the way back to about $10 from $238 all the way back to about $247.50 by the end of the day, closed near the high of the day. Earlier today, you did, like I said previously, see the markets pretty excited about those weekly insurance registration claims, and probably the price increases in Canada for charging as well did contribute to this early day bounce that we've seen in Tesla stock. But as you can see now, you're near the lows, not quite at the lows, but you're above your 100-day moving average. So that is very good. Now your MACD on the other hand is not so good. You're curling down, you're heading into negative territory on the MACD. The RSI is also curling down, so that's not looking nearly as good. But if you take a look at the S&P 500, you're much better on the charts with Tesla than the S&P. The S&P is basically in free fall, and you're well under your 100-day moving average. Your next stop on the S&P is 415 at the 200-day moving average. For Tesla to get back to its 200-day moving average would be down here at $204. So Tesla is holding up substantially better than the broader markets, and I think there's a clear reason for that. Tesla's estimates are way too low for 2024. You've already priced in a very recessionary outlook for Tesla's earnings next year. So big surprise, we get a recession and the markets are selling down on this, I guess I should say, upcoming recession, whereas Tesla's already been priced as if they were going to see a recession next year. Tesla also has the launch of the Cybertruck coming very soon, which can only be a good thing. So that is going to do it for this video. This was the tip of the iceberg compared to what we need to get into later on tonight. I highly recommend you guys stay glued, literally glued to the channel for that video coming out at 9 p.m. If you made it to the end of this video, let me know if you will be tuning in at 9 p.m. tonight down below in the comment section. Like I said, if you would like to come trade with us live in real time, come hedge out your portfolio, come make some sweet, sweet money, link down below in the description of this video. Anything can happen. It's not a guarantee that you will make money, but we do try our best, and you also help support the channel. So that is going to do it for this video. You guys enjoy the rest of your day. My name is Michael Tyler, and I will see you in the next one.